Hi everyone and welcome to our market analysis videos here at Zenfinex. My name is Connor Woods and I'm the Senior Market Analyst at the company, providing to you daily videos on market commentary and educational content. Now for today's video I'm going to be covering a crude oil forecast for the remainder of August, and as always I'm going to look at demand and supply factors to give me that bias, and this is really what's been piling the pressure on this commodity. I'm then going to move on to the chart to check some key levels to look out for. Okay, so I'm going to go through supply and demand factors for you to give us a general fundamental view. The demand factors I'm going to focus on first, as this is what's caused oil prices to fall in recent weeks, and it's definitely what's caused the oil price to fall today quite sharply, which I'm going to show you on the chart in a minute. Now, coronavirus cases, mainly the Delta variant, have been growing globally, and what this has done is actually forced hedge funds to sell off portions of their portfolios for the 6th time in 8 weeks. Now, the reappearance of cases in China, I think it was North America, and definitely Europe, this has softened hopes that long-distance travel will recover quickly from the lows we've seen in 2020. Furthermore, we have seen New Zealand go into lockdown over that one case. That's just the way they like to deal with things out there, which is fair enough. But I think the most important thing to take away is that traders are now weighing up the effects of rising cases on global economic recovery. Especially as oil has been on such a great run recently, people are now wondering whether that was overextended. On the supply side of things, the United States is expected to boost its shale oil supply by 8.1 million barrels per day beginning next month. This will be the company's highest output since April 2020, and crude oil inventories data was released yesterday, which provided us really with more information on how the demand-supply gap has changed in response to these recent developments. Now, US crude oil inventories fell 3.2 million barrels last week to around 435 million barrels, and that's the lowest since January 2020 and a lot more of a drop than anticipated, but it didn't stop the huge drop that we're just about to see now. Okay, so if I'm looking at the chart now, it's quite clear to see at the time of when I'm recording this video, we are kind of just falling off a cliff, as I said before. It doesn't look great for oil in the short term at the moment, mainly to those demand factors that I spoke about before. But let's have a look at some key levels which I'm going to be looking out for to see how far really oil can go in terms of its drop, and if we're going to see a recovery at any stage. So first of all, I quite like the idea of, if you are bullish on oil, I do like the idea of buying from, this is a daily order block level which actually broke structure to the upside. It broke that 67 level and it went on that grind to the upside. We had quite a lot of buying power from here, but I am wary of the fact that hedge funds are selling off portions of their portfolio. So if you wanted a buying opportunity, you could be buying from this order block with your stop loss just below around 61 and aiming up towards something around 68. However, I do get this feeling just from this price action that we are going to break below. Hi guys, thank you for listening to this video. Just really quickly wanted to touch on a really exciting offer we have on the website. It's a limited time offer, and if you head over to zenfinex.co.uk, you will see the offer in front of you straight away. And this is that you can trade Forex on a standard account with raw spread plus zero commission. And now Zenfinex is also an FCA and no dealing desk execution broker. If you are interested in this offer, you can get in touch with the team by clicking learn more, or you can simply go to open an account where you can start the application process. Below this level, so I'm going to delete that and have a look to see where it could go. So if you are in any sells at the moment for oil, which I'm actually not, I do see a clean run down to the 200-day moving average at around 60, being a psychological level as well. That would be my take profit number one. What I am expecting from here is a reaction. If we're going to change the trend of oil in the medium term, obviously it's going to take more demand prospects to be halted, such as the COVID-19 cases, but I do think we need to break below this swing low. This is the March swing low down at around 57. If we break below there, then I think we're looking down towards something like 51. So I meant to highlight as a take profit for sales. Then we're looking at something like 51, but I don't think that will be the case, but it could be. If I go down to the 4-hour chart, On my style of trading, as I'm sure the people that have been watching my video know, I like to trade off of using order blocks and supply and demand zones. Now, when we spoke about hedge funds and portfolios selling off some of their positions, the selling power really has come from this order block here. This is a 4-hour order block, which I'll mark for you. Now, it's going to take a lot for the market to retrace back to that level, but I have to be patient because it's the strategy that I know. RSI is now in oversold territory, so if we can get one last push down into around the 60 level, which is where our 200-day moving average is, what I'd like to see is where the market bounces off of that take profit level and into our order block zone, and then we can look to aim potentially lower. I'll just mark that as a normal line here, and then we'll mark in our short position. I'm probably going to be putting in a sell limit around 66. I am tempted to do it maybe around 65 just because I like the idea of the 65 level. But this trade, if you're aiming down towards the 60 level from this 4-hour order block up here, will be around a 6.8R trade. Now, I do think this is going to require some patience. The long-term trend of oil is still bullish, so I don't think there's too much to panic about just yet, but it is really important to keep an eye on those demand prospects of what's going on with the coronavirus pandemic, which seems to be creeping back in, and this general risk-off mood that we have is kind of fitting this narrative as well. I think global equities look a bit vulnerable, and it's kind of feeding into things like oil as well. So that's it really for oil today, guys. I wanted to keep it nice and simple. We are falling off a bit of a cliff at the moment, but expect a reaction potentially from the 200-day moving average up into hopefully our 4-hour order block, and then we can look to sell from there. Please continue to like and subscribe to this channel, guys. It really helps boost the channel. We do appreciate it here at ZenFinex, and make sure you have your notifications turned on so you do not miss out on a video as soon as they're published. They're always published at around 4 PM GMT. Cheers, guys. I'll catch you all for the next video, which will be next week.